Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include affordability, and that's talking more than just homes. My interview with EPM's Eddy Perez on a variety of topics, from meaningful awards in the mortgage industry to various lending strategies to potential avenues for disruption that can help lenders win market share. And in the capital markets, tariff news volatility has seemingly grown old. Are you looking to cut verification costs by up to 50% while improving borrower experience and pull-through? TrueWork helps lenders streamline income and employment verification through a single VOIEA platform used by 4 of the top 5 lenders. With an industry-leading 75% completion rate, the platform consistently outperforms competitors in manual waterfalls in speed, cost, accuracy, and rep and warrant relief. They also offer free pre-approvals to help your borrowers qualify faster and only pay when a file is completed. It's used with first and second liens as well as in wholesale. It's fast to implement, easy to use, and built to drive ROI. Learn more at truework.com. If you think that everything's great in the U.S. economy, maybe it's not. Well, at least in New Jersey. While many residents are frolicking on the Jersey Shore, Toms River Schools, one of New Jersey's largest districts, voted to file for Chapter 9 bankruptcy after refusing to raise property taxes another 12.9%. This comes after last year's 9.3% increase, totaling a crushing 22% hike over 2 years for homeowners. When you talk about affordability or the Fed controlling inflation, think about issues like this. And that's to say nothing of what insurance premiums have done over the last couple years. State officials had ordered the Toms River District to either pass this budget or shut down all programs immediately. Over 7 years, New Jersey's school funding changes slashed $175 million from the district's budget, and residents already pay some of America's highest property taxes, with schools consuming over 50% of local tax bills in many towns. Meanwhile, multi-million-dollar home sales in New Jersey will be subject to a mansion tax as part of a new bill that was passed in tandem with the state's $58.78 billion fiscal year 2026 budget. Taking effect on July 10th, this new bill shifts the burden of the mansion tax as well as the state's controlling interest transfer tax for commercial properties from property buyers to sellers. It also maintains the original 1% fee for home sales worth $1 million to $2 million, but now also implements higher fees for increasingly expensive properties. It seems everything is going up in cost. Switching gears slightly, we saw more selling action in the bond market yesterday, a continuation of Monday's action with little change across the yield curve despite a relatively weak 3-year note auction and talk of more tariffs and tariff letters coming soon. July's Treasury auction series began with a $58 billion sale of 3-year notes, coming amid a bearish month that saw yields rise nearly 20 basis points since June. While the issue priced 10 basis points richer than June's auction, relative value wasn't so compelling given strong performance and surrounding maturities. Investors have shown a recent preference for concessions in 3-year notes, with most of the last 9 auctions tailing. Yesterday's auction followed suit, tailing by 0.4 basis points as inflation concerns and Trump's renewed tariff threats weighed on sentiment. Treasury yields briefly rose but reversed lower into the close. President Donald Trump escalated trade tensions yesterday by targeting a new commodity, copper, with plans for a 50% tariff. Additionally, the White House confirmed a series of new tariff rates set to take effect on August 1st, including 25% for Japan and South Korea, 30% for South Africa, 32% for Indonesia, 35% for Bangladesh, and 36% for Thailand and Cambodia. The original July 9th deadline has been pushed to August 1st, but Trump made clear that this is a firm cutoff. He indicated additional notifications will be sent to other trading partners soon, with no further extensions expected for countries already notified or those about to be. For today's interview, I wanted to welcome to the show EPM's Eddy Perez to discuss a variety of topics, from meaningful awards in the mortgage industry to various lending strategies to potential avenues for disruption that can help lenders win market share. He's founder and CEO of EPM, which is based in Atlanta, Georgia. He oversees operations, sales, revenue, marketing, compliance, and technology. And throughout his career, he's held multiple executive-level positions. Prior to founding EPM in 2008, he operated the top-producing office for Global Mortgage Inc. He's also the chairman of the MORPAC, panelist for MBA Future Leaders Program, holds a seat on the board of directors with MBA, and is now co-chair of the new MBA Affordable Housing Council.
I want to start by talking about TAG 2025 award winners and kind of high level conceptually. There's a lot of awards in the industry. And it can get diluted depending on how companies do it. I think the awards you give out mean a lot. You explain the rationale behind it and how you keep it something that's sought after and a real achievement for people.
So there's two sets of awards. There's the awards that people vote on that we put out there. So that's voted on by your peers. And I've always learned that anybody who gets one voted on by their peers, it's very sentimental, even though they don't know who it is. And then, yes, we have our own awards, which a bulk of them are created, and it's my hand selection on those. And they always have a meaning towards somebody. You know, I have an award after my father. I have an award after my mother. This year we rolled out an award after my uncle, who's like a second father to me, and what they represented, as well as we had an award after Kevin Delory, obviously, who passed. And then we also have an award after Dave Stevens. And basically, it's people that had a lot of impact on my life and what I felt like their legacies don't need to be forgotten. My mom's still alive, but that's the only one that's still alive out of that group. So that's really the reasoning behind it, because I believe that they brought certain aspects that I've had the privilege to learn from and be able to pay it forward out there.
I saw the term when I was looking at the awards, influencers. And I think we get caught up in kind of the social media age of this influencer. They sold me some sort of product sign. But an influencer at its core is somebody that you want to emulate and look up to and that sort of thing. And that's how you've categorized these awards. You talk about the influence that you feel like these award winners have on people and just kind of what it means to have them as a guiding example.
Yeah, you want me to go over each one?
No, not necessarily.
Uh,
Yeah, generally speaking, what it means to lead, what it means to influence others, those sort of
yeah, everybody always has a couple characteristics. If they've definitely lived a life that's influential and changed lives that you can really emulate, to your point. It could be tenacity, it could be conviction, it could be spirit, it could be perspective, it could be a lot of different things that help put it in. And a story behind each of them is always what does it, because it's never just the word, it's the story that identifies the word that brings everybody into an understanding and a perception of it. So influence is done in many different ways. There's not a one size fits all. And there's some influences that don't affect people the same way as it affects others. And part of the reason I know that is when I gave out a lot of those awards, different people had different ones that meant more to them. Like they're like, man, this one really hit home, because then they can identify, I had this happen to me. I had this, I've had this go on. So it's a broad stroke, because not everybody's the same, even though we're a lot more similar than we're different, but we're similar, but in a range. And that covers a lot of it and things like that.
I want to transition toward your personal story a little bit here,
Mhm.
because obviously you lead and you influence. What have you learned over the years about inspiring people, getting to a common goal, getting a collective to a place, getting buy-in from everybody? Things that you've learned over the course of your tenure.
Yeah, I think people follow people that have focus, conviction and sheer will. I think if there's three traits you could have, it's those, because it's real easy to get sidetracked with the noise, especially in the industry. And I learned that firsthand extremely well in 2018 and 2017, when coincidentally all we heard was margin compression, lower volume. Sounds familiar. People are having to get rid of staff. You're having to rethink. And I joined a CEO peer group because I was like, I don't want to hear any more advice from mortgage people. I need to know people that ran other businesses, because at the end, you're still running a business and things of that nature. So focus is very hard to keep, because there's a lot of noise and a lot of drama that happens, which makes sense because we move trillions of dollars. It's so huge of an impact. So the drama is going to be huge too. It's just how it kind of goes. You have to understand that part of it. And conviction, people want to know who you are. And one of the biggest convictions I tell people all the time is it's perfectly okay to talk about your strikeouts and to own your mistakes. I think a lot of people are worried how that may get thrown in your face. And I just want to let everybody know is Mother Teresa had stuff thrown in her face. Just give it up, guys. People are going to weaponize things, and character assassination is part of leadership that you just have to accept. And if you know you're not that way, then it's completely okay. And at the same token, if they're saying something that maybe only 10% is like you, then you have something that you can work on and really message. So it's not like they don't help you either. You just have to understand it from a positive perspective. And then sheer will, you just got to do it. And that's what a lot of people run into. They just won't do the work. They'll want to, they'll say it, but doing the work also means you're consistent for an awfully long period of time, not just a month or a week. It's years. And you have to accept that.
Yeah, I appreciate you saying that. I think when people think of the Chrisman Commentary brand, it's consistency. 6 days a week, it comes out at 8:30 Eastern. It's been doing that for years. That's what it's done. So that's cool to hear. I don't think you were as zen in your younger days about some of the stuff that was probably thrown your way. How do you get to a place of being at peace with what people might be saying? I'm sure there were ups and downs. I'm sure there's stuff that hurt along the way, and I'm asking that
Yeah.
personal experiences, wondering about yours.
I lean a lot on my baseball days, but not from what I learned on the baseball diamond. It was actually funny. It was an interview that Derek Jeter, Michael Jordan, a lot of people were on, and I believe they're on Oprah. You could probably find it. Jeter said it best. Baseball is a sport of humility. You go 3 for 10. So you suck, basically. You don't get the job done 70% of the time. You're a god. And it makes sense because that's more like life, because you do have boundaries like you have on a baseball field. You do have the competition, 8 or 9 people against you, and not a you against the world, but it is to a degree. So you just got to understand that life's more like baseball. It's not going to be football quarterback, 3 for 10, and you're not even scratching the varsity team, the JV team. It's about the only sport that really emulates life because, hey, you can have a great idea and it's going great. And then competition makes a play on you and they get it. And you just have to understand that. And the key is what you said, like what you said about Chrisman. Come hell or high water, 6 days a week, we know that. It's that consistency that gets you through it. But yeah, I mean, people have said some pretty hurtful, messed up stuff. But, my father also prepared me really good. He says, if people aren't trashing you, you're not doing a great job.
Good advice from him. I want to talk competition. Let's move into
Sure.
kind of the sport arena, and at its core, mortgage banking is full of frenemies in a way.
Mhm.
There is, contrary to what some people might believe, there is a large enough pie for everybody most years, and so it's
Mhm.
how do I get my sliver of that? You've obviously focused on first generation American families. You're now have a focus on first generation home buyers. You have VA programs that are out there too. There's a neat niches that you have in this current environment. There's a lot of talk about borrower experience, technology, and these things. But what at its core, it's still a relationship industry. How is EPM out there winning business, making sure it's satiating the needs of its clients, of its partners, those sorts of things?
Well, you said it earlier. You got to know what model you're under. And not every product's the same. I tell people all the time, conventional and govy is like saying a daughter and a son. Luckily, I've had both. They're different genders. You cannot run them the same. They don't have the same dynamic. No different than a purchase and a refi do not have the same dynamic. Just like even deeper, a rate and term and a cash out don't have the same dynamic. So you have to understand the flow and the dynamics and the emotionality. At the end of the day, it's still behavioral economics at its core. So you have to understand that. How are we getting business? I personally think, on the conventional side, it's going to go the AI world. It's going to be just about speed, 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 because that's actually coming from the agents. The agents want the approval as soon as possible to lock them off the street or however they want to call it. The agents, especially after the NAR settlement, are more about how fast can you get me an underwrite when it comes to conventional. So that's where AI and some of the things that we've rolled out that even clear its own conditions before it gets to an underwriter is moving things so much faster and getting those people to clear to close. And I hate to say this, but this is how some people are motivated. It's just a fact. You get it done sooner, then all of a sudden they move the closing date up, they get their money faster. And even if they don't, they've secured the money in their mind. And that's what you have to think about, behavioral economics. On the Govy side, it's perfectly okay if the underwrite takes 2 days, even 3 days, depending on the product. Renovation obviously takes longer, more moving parts. Because on those, the agent is more worried and the builder as well is more worried about, is the underwrite correct? So in other words, if something on AI misses something, not a big deal because it'll speed through it really fast. Not a big deal there because speed is just always at an all-time high. This one, it's like, okay, will this loan be able to close? And will you be able to stick with it? And that doesn't mean something doesn't come up and can derail it, because that happens, but did you not miss something on the initial? So that's where speed is not as important as quality of the underwrite per se. Basically, will the loan come? And that requires two different types of skill sets of the individuals leading it too. Like you can't have the same underwriters doing both. They're just not wired the same. And then the cash outs, nowadays, it's really about debt consolidation with how much you're seeing with 1.2 trillion in debt. So that one is almost like a purchase too, but it's a purchase of stress reduction and understanding, can they get this done? Do they have to pay this off? What do they have to pay off there? How do they move forward? How do they put their life together if they lower their credit and they're having to pay a higher interest rate because their credit is different? How can they then get back into a conventional loan and fix their credit? So that one's more an advisory role is what gets done there. So it's just really understanding the dynamics of the industry, because there is no one size fits all. And what you talked about earlier, I think competition's amazing. Jordan doesn't exist without the bad boys. That's just a fact, because he had to look inward. I don't believe in zero sum game. To your point, $2 trillion in volume, 5.5 million units, whatever it is. There's plenty to go around. The problem is, and this is including myself, I'm including everybody on this one in the industry. Nobody is as good as they thought they were from 2003 to 2022. 9 refi booms, manufactured interest rates. It's like the steroid era of baseball. When not everybody, when a lot of people are hitting 50 to 60 home runs consistently across the board, and I saw that sport, 30 was maybe the top. Guys, you're not as good as you think you are. You had some performance enhancing drugs, which was known as quantitative easing. Those days are gone because of inflation. Gone. So you're going to learn how to really build value and add to a relationship. And I'm not sure if a lot of people can evolve and accept that, because they're just now, Fed's going to cut rates. That's going to trigger. It's not going to bring 4% back, guys. 4% only happened because of quantitative easing. Like, I'm not saying that it can't. That is a horrible bet to try to make, because people have been making it for 3 years. And the data. Something like 80 something percent of people are below 6%. Like, there's just not refi inventory. There's an inventory shortage two ways: new homes and refi inventory, because you've got people that are landlocked, or loan locked, as they called it. The loan's too low. And second mortgages now really exist again. So you're seeing second mortgages pop up instead of a full cash out refi. It's a different market. It reminds me a lot more of when I got into it in 2002. And I only got to see what I call that real market for about a year and a half. But it was enough of my early time, and then I'd built my business up, that I got to, and I never forgot that, because that's the same fundamentals I kept throughout the whole time. And it was easier to get business because it just rained. But yeah, that was really the foundation pieces there.
There's a ton to unpack there. I would think that the last 18 months, 24 months would have gotten people out of this hope is a strategy mentality. But yet it still persists. Hey, Trump is going to appoint a shadow Fed chair, and then it'll be easy money again, and the refi boom will flow. Or, even last year when the Fed started cutting rates in September, refi boom's coming. Well, it was a 2-day refi boomlet. It's like hope is not a strategy here yet. And I'm get frustrated with this industry at times, because people know how cyclical it is. And yet they're like drunken sailor, coming into port sometimes when the loans are falling from the sky. There's not a lot of foresight and planning for what am I going to do when tougher days are ahead. The thing I want to hone in on, though, that I think is important, is what you mentioned about speed. There's a lot of companies out there that have fast closing times. It's been almost 10 years since Rocket's Super Bowl commercial. Push button, get mortgage. And that drove so much business for Rocket, number one lender in America, those sorts of things. Why haven't we seen a game-changing play around speed to the general public, kind of like that? And maybe that's a naive question to ask, but it seems like that ad was so transformative, even if Rocket couldn't do what they touted. Why aren't we seeing other companies make game-changing advertising in that similar speed sense that really plays to consumers and the general public?
Well, I think the big problem is Dodd-Frank the bill. I think that changed the culture of the industry and the dynamics because of how much regulation and cost it has increased. And you got to have a checker for the checker of the checker. Now, luckily, there's tech today that moves it a little faster. However, I'm not sure. First of all, the mortgage is a 12-step process, and it's like from 1 to 12 steps. So it's a process flow, it's a manufacturing line. There's been so much red tape that's been added. There's so much bureaucracy. Like a lot of people don't know this, and I knew this from being PAC chair for the NBA and more PAC. So many of the bureaucrats in Washington haven't left. So it's not a Republican and Democrat thing. That's what everybody gets confused on. It's a bureaucrat thing. It's a red tape thing. They survived the financial crash and had to clean up that mess. There is so much PTSD, and with so much data available, you saw like, oh my God, defaults have gone up 40%. Yeah, they went from like 0.8 to 1.1, which is still historically low, but liars figures lie. I'm not sure if the laws allow it in the red tape. And I hate to say this, I think if it did get discovered, because you're also with the IMBs, literally something like 70-80% of home purchase market, I think individual states would start coming after you too. So I think you just have to understand that there is so much that we're still dealing with because of the financial crash. It's ironic that memory is not going away for a lot of people, and it is staying really, really long. And I'm not sure, maybe when all those people retire and the people that inherit it just hear stories of the crash versus having lived it. I'm not sure. I mean, because you've seen Fannie Mae a couple years ago all of a sudden start stepping up on repurchases, even though loans are performing and doing well. I'm not sure with that bureaucracy and red tape, if it's possible. I'm just not sure.
That's a very good point. When I started my mortgage career at SoFi, we thought we were going to come in and completely take over mortgage. Then you get bogged down in the regulation, compliance, the process, and you realize quickly, no, you can't just come in and disrupt, which is good and bad, because I almost think for the mortgage process to be revolutionized, like you said earlier in the interview, it's going to take some sort of outsider. And you said, I don't want to listen to a bunch of mortgage people. I want to hear other people on how to run a business. I would think that something would come in and be able to figure it out differently, but there's so much red tape that you have to deal with. So it's a tough balance there. Another point you made on the borrower quality. We're originating great non-QM now. Those are great borrowers.
Oh God, yeah. LTV is low.
Yeah, the LTV is low. The credit scores are high. The ability to repay is great. It's nice to see that the industry is now finding creative ways to cater to those borrowers. There's investor demand for it, and the industry is getting a little better at counting income. They were really good at counting debt obligations. Now they're better at counting income than they used to. We talked with EPM, kind of these different programs or channels that you're focused on. How do you see that evolving into the future as you try and continue to win business? What does the future of mortgage look like? And it's evolving so rapidly with tech and AI out there.
The one thing that I always wonder is everybody wants more private capital to come into the space. And the only way it can right now is in non-QM. To a degree, I think Fannie, Freddie, and Ginnie stay still the biggest players. This is one of the things that I said after the financial crash last time. Banks are more like government agencies now because of how regulated and how much they're down and how much Dodd-Frank that bill did. And we essentially, as I jokingly say, are government contractors for housing finance. So I don't see Fannie, Freddie, and Ginnie really losing that stronghold. I don't see that even going down. I think it's at 90% now or 88%, something like that. I don't see that getting any lower. I don't, especially how they kept raising loan amounts, because when I got in the space, jumbo was above 300 something thousand. I think it was like 359 or something, or 330, and then it moved to 359. I don't know the exact number. The non-QM space for jumbo, outside of some of that documentation you're talking about, like the self-employed person that's got to do bank statements or anything like that, wealth management really took that over because those people have assets, and then wealth management will give them those loans. I don't know. I see more and more private capital coming into place. However, maybe 15% of the market. I see the future of mortgages staying very government influenced. even if, say, they leave conservatorship or say there's a solution, it's still backed by the United States government. So it was still a government, sponsored entity. That's what people don't understand what GSE stands for, or enterprise, I think was the word, not entity, enterprise. I don't think people understand what that meant. It was still backed by the government stamp of approval, and that's what the bondholders want. So I think it's going to really be about tech, speed, and culture. Because I think now, as crazy as it sounds, the industry has not had good culture after the crash. It's like anything. It was like an apocalypse. So it's just mayhem, kind of like what I would say Europe was after World War II. It was like, annihilated to the hill everywhere. So it's like people are trying to figure themselves out. I think that's what happened for a long time. I think we could have figured it out faster, but quantitative easing didn't allow it because just refis kept coming and then you're drunk on the sugar high. But I do think now people really do have to have leadership, growth, add value. I think it goes down to kind of like tech companies where it can't just be about your products. It's got to be about your team and how you're doing it. As Steve Jobs revolutionized Apple when it came to leadership, I think that's going to be way more pertinent. And I think you got to be very vocal and you got to stand for something out there and you got to be willing to put it out there. And even if you get it wrong, you get it wrong. But it's about trying to inform people the why and everything.
And to make this full circle, that's what I feel like Dave Stevens really stood for. He's out there, the voice, he's vocal, respected. Here's how it's going to be. And it frustrates me a little bit that there's been a power vacuum or voice vacuum after his passing, where there's all these voices chirping on LinkedIn or wherever it might be. And it's like, I miss Dave. I miss what Dave had to say. So it's cool you're honoring his memory. Let me close with this. First generation home ownership is very important to you. The American dream. And obviously you come from a lineage that would make sense that that's something you're passionate about. What does the American dream mean to you? What do you hope that it means to borrowers that work with EPM, that sort of thing? That's where I want to ask.
I have a little bit of a controversial belief on this one. I don't believe if you were born in this country, you can be a part of the American dream. I think you can be part of the American gift. And I learned that. I think the American dream is for the dreamers that are in another country, oppressed, held back, whatever you want to say, maybe not the resources, whatever you want to call it. It's the immigrants that want to come to this country because they're looking for that dream of what is America? What is this capitalism? What is this freedom? What is this? You can sit around on TV and insult the president and you don't get shot or killed or beaten. Like, what is this craziness about? And then when you get here, it's like Christmas morning, as I always say, it's a gift. It's like a good pair of jeans. What are you going to do with it? How are you going to wear it? What are you going to do? So I've always said that the American dream isn't dead. It's just not for us that were born in America. And I was born in America. The American dream is for the immigrant that comes here because that's what they come for, that dream. Once you're here, it's a reality. And any great reality is a gift because it's an opportunity. And that's really where I think mentally Americans really need to move into because it is truly a gift. And I've seen it. I've witnessed it. I didn't say it's going to be easy. You have to be consistent. But everybody in life, every human ever born has had problems. You just got to choose what problems you want to take.
Yes. And I saw a recent quote from Gervonta Davis, the boxer. And it essentially said something along the lines of, we can't choose what situation we're placed in. We can only make the best of it. I think, and I think that's applicable whether you come from a distant country dreaming of coming to America, or you're born with some sort of privilege here. You can only make the best of whatever situation you're in. You've obviously done a great job at doing that. I admire what you built at EPM. I want to thank you very much for making the
Thank you.
Okay?
My pleasure. My pleasure.
Consumer expectations for future inflation have returned to pre-tariff levels, according to the monthly survey data from the Federal Reserve Bank of New York. The June survey showed median expectations for consumer price increases 1 year ahead decreased for the second straight month in June, falling back to 3%. Estimates for annualized inflation 3 and 5 years ahead remained unchanged at 3% and 2.6%. A series of reports from the federal government over the past 4 months have shown inflation to be lower than that predicted by economists, who fear Trump's trade war will reignite price rises. Today's economic calendar kicked off with mortgage applications increasing 9.4% from 1 week earlier, according to data from the Mortgage Bankers Association's weekly mortgage application survey for the week ending July 4th. Last week's results included an adjustment for the Independence Day holiday. Later today brings wholesale inventories and sales for May, a couple of Treasury auctions that will be headlined by $39 billion of reopened 10-year notes, and the minutes from the June 17th and 18th FOMC meeting. Overnight, the Royal Bank of New Zealand was out with its latest monetary policy decision, keeping the cash rate unchanged at 3.25%. We begin the day with agency MBS prices unchanged from Tuesday's close, the 2-year yielding 3.89, and the 10-year yielding 4.41 after closing yesterday at 4.42%. Let's wrap up with a joke and some housekeeping. I want to name my daughter Pregnant. So when a guy meets her, he goes, "Hi, I'm such and such." She goes, "Hi, I'm pregnant." Case closed. Thanks again to TrueWork, the only all-in-one automated VOIEA platform that helps mortgage providers achieve up to 50% cost savings with an industry-leading 75% completion rate. To learn more, visit truework.com.